Right, hello everybody. Welcome to today's podcast. It's the 11th of May 2020. This is Adrian Boothie here, head of trading at Trend Signal. And in today's Trend Signal trading podcast, we're talking about all things to do with the recovery, Boris Johnson's statement, looking at the equity markets, looking at the forex markets, commodities, etc., and looking at how the tech stocks are taking these markets to further highs, and some massive moves on those, on some stocks at least anyway. So we're going to get into all of that. I'm joined today, as ever, by Jerry Miller, our chief analyst and CEO.
Hello there.
Hi, Jerry.
Hi there.
How are you?
Yeah, not bad, not bad. Sun's shining, a bit cold, but yeah, all together.
Good, good. So do you want to kick us off then, Jerry?
Okay, just have a little look back at what's happened over the past 7 days. Yeah, crikey. Equities actually had an okay week last week. It was a bit of a sort of a weird week with our market closed for our particular observance of the 70th anniversary of the Victory in Europe Day. But the previous week you had May Day celebrations on Friday the 1st. So it's been a bit of an odd time, but generally the markets are doing all right. The FTSE, that climbed about 150 points, which is quite interesting when you think about during the week, and we had the Bank of England forecasting last week that the pandemic is going to push the UK economy into its deepest recession in 300 years, which is extraordinary. But it's sort of what people know is likely to have happened or will happen, and output plunging almost 30% in the first half of this year, and still the FTSE managed a pretty decent move higher, 2.6%. American markets did pretty well. The Dow up another 660 points last week, that's 2.8%, and a lot more closely followed S&P 500, that was up 105 points, that's 3.7%, which is an astonishing performance. In Europe, the major bourse, like for example the DAX or JER 30 as we refer to on our charting center, up just 89 points. That was sort of slightly confused because the market was actually closed the previous Friday, when it would have fallen last Friday, the previous Friday, that's 10 days ago, 11 days ago. So actually it did actually better than those numbers suggest. But the S&P, wow, we're back at levels that it was seen last September. If you can, so we can see where we are now, which is extraordinary, absolutely extraordinary. It's back to September levels as if nothing has happened. Obviously it's rallied since then, but look at the Nasdaq. You already mentioned the tech stock index. This is the one where all the big tech stocks normally list, up 6% last week. That is just extraordinary. But more extraordinary, it's now up on the year. It's up. Yes. It's broken the it's back up in positive territory.
Absolutely. I mean, if you look at, if you're actually watching the video of this or the, live on it, 87.06 or something like that, it finished the year on the Nasdaq 100 cash index, and of course rallied significantly in the first couple of months or so. But yeah, we've been above it for a little while now. That's best part of what, 7 or 8% higher on the year now.
It's extraordinary. It is extraordinary. But it's that's happened a lot this week. Of course, we set back at the end of the previous week. So to see it recover and just power ahead is extraordinary. And of course, that all-time high, Adrian, that's not that far away. I mean,
it's not now, is it? Yeah.
Well, it could do that in a couple of.
It's about 6%. It's about what we moved in the week. So
Yeah, that's right. That's right. So it is eyeing up an all-time high, which is just weird. And I was reading some research put out by one of the French banks, I'm not sure, I think it might have been SocGen, saying that this bear market is not behaving like any bear market they've seen before. In that, and I think the reason why is that it started with a very, very quick reaction by central banks. They're used to this. After all, they learned a lot of mistakes in the great financial crisis, and they basically turned on the monetary taps within a week, literally. And governments have followed this up by some extraordinary measures, the furloughing schemes, the business loans, the payment holidays, everything. It is extraordinary assistance. And the UK is one of the most generous nations in terms of its what it's provided to support its economy. I think it's fifth. If there was a league table, and there is, I think they're fifth in it, with the US either first or second. And of course, the problem is some of the less well-off developing nations and some of the overburdened developed nations, and I'm talking about Italy here, who've got a huge debt overhang. They can't afford to engage in that much more, and that particular economy may struggle in the weeks and the months and quarters to come, as it were, as indeed we all will, but that one particularly will. So yeah, it's odd. Other markets as well last week.
Just as a quick, idea. I don't have the MIB up here, but we've got the Spanish, the IBEX here, and you can see that, February it was trading over 10,000. It's now 6,700. So it's still down 35% or whatever, or didn't change. But the recovery, look at the lack of recovery that it's had. Okay, FTSE hasn't had a great recovery, but certainly more meaningful than that in percentage terms. And as I say, the stark contrast with the Nasdaq, which is only 5 or 6% away, and it just goes to show how isolated perhaps the recovery is in really those tech stocks, Jerry, the likes of the Amazons of this world.
Well, you're quite right. I mean, when you look at the likes of Google, Amazon, Microsoft, Netflix, they've all performed extraordinarily well. And as we were saying before we went on air here, that Amazon, I mean, it's tacked on $300 billion in value since the start of the coronavirus epidemic. It's extraordinary. I mean, try magicking $300 billion worth of gains from other stocks. It's almost impossible to comprehend. And of course, this is the reason why indices have gone higher. Would you buy the index? Would you buy these individual stocks, Adrian? Google, Amazon, Microsoft, Netflix? Would you go near hospitality? How cheap does hospitality stocks and travel stocks and all those stocks related to them? We talked about airlines, and what about Rolls-Royce? Crikey.
Well, this is the thing. When you think about equities in general, you think, oh my word, the stock market's really recovered quite well, all things considered. But there's such a stark contrast between the different sectors. So technology doing very well, and we had this conversation before about the likes of Rolls-Royce or companies build the aeroplanes. Are the likes of British Airways and so on, are they going to be buying aeroplanes at the moment, or are they just going to refurb the ones that they've got just to reduce their costs a little bit?
Well, they'll retire a lot of planes.
Struggling. Yeah, absolutely. Yeah. They don't need to buy new ones if they're retiring planes, don't they?
They're cutting down their fleet. So any old planes that do need refurbing are off. That's it. And will they be buying any more planes? Oh, no. So Airbus, crikey, look at Airbus. They employ 35,000 people, with a lot employed here in the UK. Obviously, aerospace stocks, Rolls-Royce, British Aerospace. I mean, they're in the firing line big time. But of course, those stocks get beaten up. The only downside to them is zero, and they've come off a lot. Whereas on the upside, companies can carry on increasing value. Those delivering services, Adrian, over the internet, and there are a lot of them. And so when you think about all those tech stocks, those real big heavyweights, Google, what do they need? They don't make anything physical. Not really. I know the owner. I think they bought Motorola phones or whatever, but it's more for the technology. Amazon, wow, extraordinary. And someone reminded me in the workshop today that, but they don't make any money. They're not making profits. They're losing money at the moment. Well, that's because they're wanting to spend even more money than they're generating to get more market share, to get the infrastructure even more spread, so that they can gain more and more market share and get more people using their services.
Well, and this is a frightening thing, Jerry. I think if you think, a lot of people talking about, what is the new normal going to be? Our patterns of existence going to change? Are more people going to work from home and so on? I think this is really bad news for the high street, because I think people are now going to get even more used to buying stuff online than they were before. So actually, it falls into Amazon's hands, not just right now, but going forward with our behavior patterns changing.
Yeah, I mean, the UK strangely is quite a way ahead of a lot of other economies in that we do a lot of online buying. It's just always been the case. But I do think, though, in these lockdown times where a lot of people are suffering from lockdown fever, we want to go out almost for any reason, literally any reason. And I do think when the restrictions are eased, that I'm sure there will be that move to go back and visit those shops that we used to visit, because they do sometimes provide a bit of inspiration as much as anything else. But I do think you're right. I was listening to one of the Radio 4 programs over the weekend, and they had Martin Sorrell on, and he set up this new sort of digital advertising company that's made quite a lot of acquisitions over the last sort of 15, 18 months. And I hope I've got my facts right, but he basically was saying that, because they've been so successful at working from home, they're looking to reduce their office capacity by quite a lot, simply because they've realised they don't need it, and it is a significant cost. And I do fear for some of the sort of commercial property sector.
Commercial property funds.
Yeah,
Absolutely.
yeah,
Well, we talked about, I think we talked about this a few weeks ago in the podcast, and there was, because a lot of the commercial property, a lot of people think they own them outright. No, there's a lot of more lending on them, and if suddenly they might have 30% lending on their portfolio, perhaps. I seem to remember one fund was saying. But of course, if things then fall 30%, then there's nothing left in the fund itself.
Well,
and if all the tenants are not paying rent, then of course that's the income that generally these commercial property funds are for, is to generate an income of 4% maybe for the investor. Well, there ain't going to be much of that going around if there's not many tenants.
And for commercial property managers, they can't evict anyone now. That's not allowed. That's one of the rules brought in by the government. And so if someone can't pay their rent, they're basically getting a holiday, but they still have to pay it. When that holiday ends, we don't know. But it's come at a tough time, and you only need then the assets to fall. As you said, I think you'll find that quite a few property companies, to get a decent return for their shareholders, their gearing is a bit more than 30%. So, if they do lose, if property prices fall by 20%, they could really struggle. I mean, really, really struggle.
Well, then it becomes a cash flow issue, doesn't it? Because if they're not receiving rent from X percentage of their tenants, then they've got to cash flow that however long. And
yeah, well, they're not paying off their. They've got to pay their debt, the interest on their debt. That's right.
Absolutely.
And do they breach their banking covenants? Do the banks actually enforce the breach, or do they all stick their heads in the sand and hope it goes away in a few months' time? But I don't know. It just doesn't feel like it's going to. I mean, we looked at the office that we have, Adrian, and if we can work successfully at home, why would you rush to get back to work? I do think there is a good reason to go back to work. Having said that, I'm not trying to argue with myself, but I think there's a lot of people who will miss the social interaction. And let's face it, we are humans, quite social animals, and I think we need that element in our lives. So I think just to say that's it, we'll work from home now, it's fine. It's not.
I agree. I said right at the start. I mean, I'm quite worried about the mental health of our employees. That being at home suddenly. I mean, it's arguably okay for me in inverted commas because I've got my wife and kids. But if you're living on your own, that's a pretty isolated thing.
Yeah.
You need a bit more than that. You go around the bend, wouldn't you? I think.
Yeah. No, it can be tough, and I think that's starting to I can see that sort of happening a little bit, and I think that's one of the reasons why some of these conditions have been relaxed, and that is something I thought we'd be talking about in more detail in today's podcast. But it turns out that the media had built up the whole Boris Johnson speech last night and what he was going to do and what he wasn't going to do and all this sort of stuff, and the media built it all up, and the media sort of now blaming the government and Boris Johnson for not relaxing things. But it's just not right, and we were talking again earlier on today about some of the countries where they're experiencing new outbreaks. You've got, I mean, China's done pretty well, but they've now also got fresh outbreaks. The first reported cases in Wuhan for quite some time. Germany, wow. Germany, which was held up as the example in Europe of how to handle the situation, have now got an R rate, or this reinfection or reproduction rate, of greater than 1.1, which basically means for every 10 people that get the virus, 11 other people will be infected by those 10 people. That's basically where the number of cases will increase. South Korea. So we're all looking at this and thinking, oh gosh, do we want to be doing what they've done? And
that's the thing. I think a lot of people were hoping for and expecting some sort of big wholesale changes from Boris, and a bit disappointed with what he came out with. But no, essentially, you've got to phase it in. You've got to make small changes, i.e., doing a bit more exercise, but still in your own groups. And what they're doing is going to see if we get any reaction to that, and that's going to take a couple of weeks to find out whether there's a reaction to that, whether there's whether that makes a change. So it's got to be slowly phased in, and I think it disappointed a lot of people, and there was a lack of clarity on his short statement over certain things. But there's a 50-page document coming out today, isn't there? And but the clarity will be in there. I'm quite sure.
In the detail. No, I agree, and I just think one thing I do know, and I know you're not a scientist, and you're certainly not in the medical profession, and neither am I. And I often say a little knowledge is a dangerous thing, and I can read up, and I'm reasonably switched on. I can understand stuff. But Boris Johnson, the government, they're not medical professionals, and they're not scientists either. So they have to take everything from this SAGE committee, and that's made up of a lot of diverse groups, and they come to a consensus. And we have to react, or they have to react to what the scientific advice is, and to suggest that we should the government should be telling us what we should do in 2, 3, 4 weeks' time. How on earth do we know what's going to be happening in 3 or 4 weeks' time?
Absolutely, and this is the thing. People want to plan. I mean, people say, "I want to plan this. I want to be able to know when I can do this. When are the kids going to do this?" You can't, because things will change. It's a movable feast. It's interesting seeing some of the imagery that's going around. I mean, I was reading this on marketwatch.com earlier, Jerry, and it's a picture of a plane from the 9th of May trying to. It's just. I mean, that's extraordinary. I mean, obviously, we're not in the States, not quite sure what the press are making of it all out there, but here, that would never happen here right now, would it?
How on earth? You only need one person who's got that bug in that plane, and you've got, forget about an R rate of 1, that R rate will be 25 on that plane. Yeah. And those, however many people then get it, those people will then go on, and you have to realize how those things spread
geographically too. It's part of the thing with Wales, with Boris Johnson's statement didn't make it perhaps quite as clear that was really just about England, and Wales have their own plan as to Scotland, as do Northern Ireland, and just jumping over the bridge from England to Wales has a totally different way of being. So if you want to do some exercise in Wales and you just jumping over the Severn Bridge, then technically you'd be sort of breaking the law, because actually in Wales they've been okay. The spread hasn't been quite as big as it has in other places, so they don't want everyone suddenly doing their unlimited exercise in North Wales.
The weird thing is, we're a United Kingdom, of course, and the advice the government gets, the government is for the United Kingdom, but because of the sort of devolved nature of Scotland and the Welsh Parliament, they can make up their own decisions on these things. But it does seem a bit weird that people in the UK can go out in the sunshine and sit in a park and meet up with one other person, as long as they remain socially distant, i.e. 6 feet. But if you drive over the Severn Bridge into Wales, you potentially can be fined, which is sort of independence, but not the sort of independence that the Welsh or the Scots imagined, I guess. But I think that's fairly innocuous myself. I think a lot of they reckon that the spread of a virus outside is a lot less likely, and if you're only meeting one person that's 6 feet away, then I think that's a low level sort of risk, in my opinion.
Yeah, I certainly don't fancy that. Was it United Airlines? What is it? That flight from Newark Airport to I don't know. I don't even know where it was going to. It doesn't really matter. I know I'm not on it though. I don't want to be on it. Fascinating. Shanghai Disneyland, that's reopened. I don't quite sure how that's going to work, but it's
Well,
open again. Imagine how
they've
long the
made
queues are going to be now.
yeah they've made the effort to distance, haven't they? But you just think, come on.
Well, that's not 2
Uh,
meters, is it?
no, doesn't look like it. I just anyway. Listen, these companies, these businesses are suffering so much. That's Shanghai. Good luck to them. But I mean, we talked about commuting, Adrian.
Mm.
I mean, tube train. They reckon they can only realistically take 10% of what they would normally take. In which case, if you need to commute to get to your manufacturing company or your construction site or whatever you're doing, how on earth are you going to take public transport? Bikes, maybe scooters, you walk, you run. A lot of this is just totally impractical where someone lives in the East End of London and works in the West End or even further west. It just
Well,
doesn't.
it's interesting. It's interesting about the sort of the cycling and running, cycling in particular. I guess it was the CEO of Halfords was on Wake Up to Money this morning. I don't know if you heard him, but just talking about actually they're slightly ahead of where they expected to be this quarter, because whilst people are doing less journeys for their cars, they're get an absolute hatload of people out on their bikes,
Yeah,
and so that's doing pretty well.
yeah.
And actually, I think they're doing some sort of 32 point. What they're trying to do is get people back on their bikes. They're doing some sort of free 32 point. I don't know why I'm doing some sort of advert for Halfords here, but
Yeah,
it's a free health check for your bike. You can go and take it in. Of course, what they want to do is then sell you another helmet and sell you all the other bits and pieces, don't they? But
yeah.
it's quite
Nothing's
interesting. The
free.
businesses, yeah, that's right. But there's a lot of businesses that are doing okay out of this, and it's interesting. Even Halfords, that you would think of more as a car company, actually been okay.
I guess are they allowed people into their shops? I'm not sure whether
Yeah,
it all
yeah. I
happens.
don't think they've closed that many. They've still got something like
Oh no,
400
cycle
stores
shops.
open.
No, you're right. They've been left open. You're quite right. You're quite right. Yes, but it's a bit like Quick Fit will check your tires to see if they're not worn out, knowing full well that most people, when they get their tires checked, are probably worn out anyway, and it's just a way of getting business.
Yeah.
But good luck to Halfords. There's got to be winners, and there certainly are some, and I'd definitely put them in one of the winning brackets.
Mm.
Not in hospitality and not in travel or leisure
No.
or being a publican. Gosh.
What okay, so what about the FX markets and the commodity markets last week, Jerry?
Yeah, interesting. It seems that there was still a little bit of safe haven buying of the dollar. What have you got there? Have you put up the euro maybe? Okay, sterling, yeah, that'll do. Sterling fell marginally when you look at where it was around the 1st of May, was it? That was the previous Friday. Yeah, it moved so less than a cent really. I mean, it had a bit of a volatile time of it. But sterling is sort of held in there really, but generally across the board, there was a bit of safe haven buying of the dollar. So the euro weakened, sterling weakened, but the yen rallied against the dollar. And that's also, the yen is regarded as a bit of a safe haven as well. I know that's not the case today, but
Yeah.
I'm
Yeah.
looking at, we're talking about what happened last week.
Yeah.
So this safe haven buying of the dollar and the Japanese yen was apparent last week. But relative to the other moves that we've seen more recently, excluding today, of course, we're not. The markets have definitely calmed down a little bit. Gold market, precious metals, golly, they've continued to trade close to their multi-year highs, haven't they, Adrian?
Yeah.
I know gold fractionally higher last week, but sort of it's interesting when a market sort of makes a big move following the sell-off after the panic, the COVID panic, when all these funds and investors were just selling anything they could, including gold, ironically. And that's the reason why you saw that big sell-off in gold all the way down in March. And then it just recovered and we're back up to where I think it should be. But the volatility that there's a lot of indecision over the last sort of month now in gold. It's like, we've come up here. Oh gosh, now where do we go?
You say that in gold. I think a lot of instruments are like this. That sort of really choppiness. You've got sort of the lower highs, higher lows. It's sort of congesting together, isn't it? And you saw something similar with pound dollar. Suddenly broke. It got into this really sort of tight range. Euro dollar as well, much tighter than it has been. not just in the last sort of February and March, but actually prior to that, it's sort of tighter ranges. So this sort of explosive couple of days, and then it sort of comes back a little bit. So there's been quite a lot of that in other markets too. And what about oil, Jerry?
Oil, gosh, yeah, energy sector managed to sort of stage a recovery. Recovering some lost ground last week. I think investors have started to take a slightly more realistic view of the recovery in oil demand. So we've said goodbye to those headlines of negative oil price. I know you should show people the picture of that chap in the bath, which I think is quite
let's look at that. I mean, it's an interesting one from a trading perspective, and some of you may or may not be aware. In Europe, we had the ESMA enforced changes that over the last couple of years for retail traders, where historically your account could go into a negative amount. So if you trading on margin and you lose more than that margin by sort of gap up or gap down, or so let's say you've got a 5% margin and suddenly gaps down 5% and you're fully invested in that market, you could actually end up in a position where you are negative, you owe the broker money. But with those margin changes, it got to a point where actually you had zero balance protection, so you couldn't go below that. And it's a similar sort of thing with some of the futures brokers as well. I don't know if it's a US wide thing, but there's this is not the guy, but there's an article here with somebody, and there's going to be quite a lot of this, because with oil going sub-zero, actually there's a lot of people trading oils. It was absolutely dying that day, going from $18 down to minus 37, I think it was, on the day. That was a significant fall. And of course, a lot of people would have been looking at that oil futures price, even though it expired within the next sort of 24 hours, looking at it 50 cents, $2, $3, thinking, well, how low can it go? It can't keep going further down, can it?
Can't go below zero, surely.
Yes, people sort of thinking, well, at 20 cents, surely I've got to buy a barrel of that. But yeah, people were, as somebody here, talking here, somebody with $77,000 on their account. He started buying crude at $3.30 a barrel, and then more and more and more, until eventually he'd lost that much that it actually turned into owing the broker $9 million. Which is obviously quite an amount. But of course, that's going to be written off because Interactive Brokers had a below zero protection, so you couldn't actually go below that. So, but that money has to be paid to the counterparty, someone on the other side of that trade. So that's actually something that Interactive Brokers are going to have to wear. What they've talked about it's a $113 mistake, effectively. Not just this client, but other clients that they had doing something similar. So whilst the brokers have seen a significant increase in activity and lots of lovely commissions coming through and so on, my word, there's some bad debts floating around that they've got to make good on.
I mean, that can still be enforced, because I'm sure that guy's a professional trader. But
well, it depends.
How are you going to get 9 million from a guy who may only be worth $1 million or $500,000? You don't know. I mean, it just goes to show you that never buy something because it's cheap or sell something because it's expensive. They're all relative terms. And we flagged this up in our podcast before the market fell, if you recall, because we said at the time, there is no storage places left. Anyone who owns oil is going to have to pay someone to take it off their hands, because you're not allowed to dump it. It's environmentally not. You get fined millions of dollars. Look at BP's spill in the Gulf. So this mad panic. The price didn't go below zero, as it were. What happened is people had to pay other people to take the oil off their hands, which effectively meant it was trading below zero. It was the storage capacity that was costing the earth. But it's just extraordinary times. Anyway, the markets have picked up. And what's extraordinary is that, when I report US oil was up $6.50 last week, you think, that's it's bounced quite a lot. UK oil was up $4.50, whatever, but $6.40, that's 32%. 32%.
This is the thing, even things like the ATR, so the normal range of a candlestick, actually the size of the candlesticks have stayed the same, if not slightly bigger than they were, and yet the price is less than half. So it means that, all other things being equal, it's moving at least double, maybe even triple the speed at which it was before in percentage terms.
There's percentages, they look mad really, but I guess with crude trading at such low prices, when you get a $2 or $3 rally, you're going to get a big percentage move, and that's just the way it is. But I think there is this realization that crude oil usage will pick up, but gosh, I still think it's going to take a long time, and it's hardly something to celebrate. US oil trading at $25. I mean, what does that mean? I mean, a lot of these companies, we've discussed this before, Adrian, they need $40, $50 a barrel to make money. You know, this is still an outright disaster, and we still, you know, we know what the facts we do know is that oil demand has fallen by 30%, oil production has fallen by 10%. Work that one out. Well, the way you work it out is.
I wonder, are we going to have a big skid like we did here towards the expiry of the May contract in the end of April? Are we going to have a similar skid in the next few days because of the same storage capacity issues? I don't know. I think time will tell. I think this is a bigger move than perhaps you or I, but certainly I think one message is if you start to see it getting completely killed again over the next week to 10, just be a little bit mindful of that guy in the bath, I would say.
Yeah.
Although, like I would say from earlier, that, you know, actually there is zero balance protection. If you're a retail client trading a sort of CFD spread betting with a proper regulated broker, I should say, a regulated broker, then there is that zero balance protection. So you can't go below what you put into your account. So which is reassuring. Although if you're going to take a trade like that, probably worth checking with them before you do.
Yeah.
Should we quickly go through the calendar, because we're definitely overrunning a touch. So we've got a few bits for this week. Obviously, non-farm payroll last week. Do you want to quickly touch on that, Jerry? And then we'll go into the week ahead.
Non-farm payroll. Gosh, what an appalling number! And we've sort of had a good handle on it anyway. When I say had a good handle on it anyway, because we knew what the consensus was for the non-farm employment change. The fact that it comes out at 20,500,000 is like, oh, and you know, as you're showing there, I say you're showing there, I'm not actually looking at what you're showing, but you are showing it, yeah. It was better than consensus, so it's in green. Wow, better number.
Yeah, it was only 20 million. Brilliant.
But this is the worst since, you know, the great financial crisis, and it's probably going to get, you know, continue to get worse. And 14.7% unemployment. I mean, we knew what these numbers were going to be roughly, but they were just a bit better than some of the worst predictions, and that's one of the reasons why the market had a pretty decent day on Friday, and that washed over into the Far East with, you know, the People's Bank of China talking about easing some of their lending criteria. And I'm not sure what they meant by prioritizing the real economy, whatever that means. What, the fake economy? I mean, anyway, so news from the central bank in China overnight, Sunday night, Monday morning, this morning, and obviously what happened with non-farm payroll last week has set the tone this morning, although the tone is weakened a little bit whilst we've been on air, Adrian. But yeah, so non-farm payroll, not bad at all.
Doesn't real mean against inflation?
Well,
I don't know quite what that means when you talk about the real economy, but
maybe it was their clumsy use of English or the clumsy interpretation by the FT. But prioritizing the real economy, I'm not sure. I think it's just emphasis. Maybe it's just words. When you look at it, it just doesn't make a lot of sense.
No. Okay, so what are the highlights for the calendar for the week? So.
Okay, yeah, normally after non-farm payroll, things sort of quieten down a little bit on the calendar, and this week is a little bit the same. There's really not much out today at all. We have to go to tomorrow to get the first bit of data out, and that's, as you can see, is the inflation data. And it's the core number we look at, Adrian, as we all know. The core number excludes more volatile components like food, and, well, there ain't any inflation. It should really be called the core deflationary number, still a CPI, but the worry is definitely to the downside, Adrian. And with oil
prices,
oil plummeting, anyone that makes anything using oil, believe it or not, fertilizers, plastics, all sorts of stuff in the industrial processes, and then of course all the logistics. A lot of goods are delivered, obviously by road, rail, air, or used to be, still are in fact. But and those costs have just been plummeting. So the costs of goods, unfortunately, are coming down, which is not good for businesses. Businesses need inflation. If you're a businessman and you're planning your budget for the year, you need to know that you have a bit of pricing power where you can raise prices. But if there's no chance, and there isn't at the moment, it's quite difficult to invest in more of your infrastructure to make more revenues when you know you can't get more revenues by pushing your prices up. So inflation,
especially when staff always want their annual pay rise, don't they? So that's just going to eat into profits. But help me imagine not. Okay, so official interest rates from the World Bank in New Zealand, nothing much going on there.
No, not expecting anything there. No change in rates. We've then got the first sort of GDP reading here in the UK, Q1, and also the monthly data. And the monthly data, well, it's something that we've never used to be looking at because it's only in the last year that they've started to release that sort of data. But that sums it up. It's not a good graph. But our quarterly data, expectation of minus 2.5%, Adrian. Well, it's bad, a bit like the German data I'm about to talk about as well on Friday, but ain't as bad as what's to come in the second quarter, which will be a lot worse, horrendous. So I'm not sure what weight they're going to give us. Maybe if this number's worse than 2.5%, a negative 2.5%, they'll factor in an even worse number for Q2. But not brilliant. Jay Powell, 2 o'clock, Adrian, Fed Chair speaks. That's Jerome Powell, the chairman of the Federal Reserve, the US Central Bank, talking about economic challenges facing the central bank. Wow, I wonder how long that's going to go on for. That could be a 4-hour speech. Hopefully it won't be, but to say there are challenges, wow, incredible. I don't know what else they can do actually as a central bank.
This is when he earns his money, huh?
Wow, gosh, you thought Ben Bernanke was given a bit of a hospital pass, but poor old Jay Powell, he probably thinks, God, I wish I could be back where I was. Not only has he got the economy to deal with, he's got Donald Trump to deal with as well. Wow, you definitely. Anyway, Thursday, initial claims. It's just something that we're weirdly, it's not even that's the sort of thing I would be highlighting in red, but it's Forex Factor and their wisdom haven't. But initial claims, weekly data that is very much in the spotlight these days. So that's something that market will follow. It is declining in terms of the number of claims. So gosh, we were up at sort of 5-6 million a month ago, but it's still horrendous. More claims every week. So whatever the expectation, it will be sort of maybe between 2 and 3 million maybe this week. But there's been no I don't believe they haven't got a consensus just yet. Bank of England, we've also got Mr. Bailey, people forget we have a new governor of the Bank of England who will be talking on Thursday. I'm just trying to look at what he's going to be talking about, but maybe he's just shooting the breeze. Let's have a look. You click on we don't have any detail. Oh, actually we do. He's participating in a webinar. Well, that's what everyone's doing, but he'll be talking about central bank policy, I'm sure. But anyway,
not on our podcast webinar, unfortunately. We'll have to raise our profile a bit first for that.
But the feedback just says he's participating in a webinar. Maybe he's doing a Zoom meeting with his mates. Anyway, there we go. Friday, let's just hop to Friday just to finish off here, Adrian. We got the first quarter GDP reading. It is the first quarter GDP reading for the Eurozone, but it is the second reading. It's not actually listed here, but it is coming out. The Eurozone as a whole, so that includes all 26 states or 7 states, 27 states, 3.8% is what was a negative 3.8% was what has been recorded in Q1. Possibly it could be worse. We've also got the German one, which you've highlighted, slightly better than the UK of 2.5, but 2.3% negative. That's the worst reading in Germany since the financial crisis. And likewise in the UK, in Germany, it's going to be getting a lot worse in Q2. a lot worse. And then we have in the afternoon US retail sales, core retail sales, again, excludes certain volatile components, 8%. Wow. And that's still getting worse as well. So not great reading for anyone. But
no,
you know, with the market just likes to see red actual numbers. So if they beat the consensus, if we're expecting 8% fall and it only falls 7%, the market will think that's a result.
Yeah.
But you know,
yes,
exactly. Adrian, it's what's happening with companies that's going to really matter. And we've got some results out this week from the likes in the UK, the likes of Vodafone, big company, TUI, Travel. Gosh, just
TUI would be interesting because it was only last year that Thomas Cook went bust and into administration. And you kind of think, well, they probably rubbing their little mitts together at biggest competitor.
I think they are a little more resilient. But and then look at the EU. Look at some of these German stocks. Deutsche Telekom probably done okay, but ThyssenKrupp and Alstom. I mean, that's. I don't know. I just think those companies will be struggling. It's like the heavy engineering companies and the car companies. You just think, what is the likelihood of these picking up?
You mentioned Aston Martin having their results this week, and it was only a few months ago they were doing a rights issue. Since they floated 2 years ago, they've done pretty badly, and then they had a rights issue, and because they wanted to help with their models in China or something. Think, God.
Yeah, it's not a pretty picture, is it? I think Aston Martin. I can't think many people, even the wealthy, will be thinking about rushing out to buy an Aston Martin at the moment. Maybe Jeff Bezos, but he's got spacecraft. Why does he need an Aston Martin?
Exactly. Yeah. Yes. Good. Well, okay. I think, is that pretty much everything, Jerry?
Yeah, that's the calendar for this week. A little lighter than last week.
Good. Well, that is pretty much it from us this week. So hopefully you enjoyed the session. Remember that we do these trading podcasts every week. You can listen to us on iTunes. You can listen to us on SoundCloud, on Spotify. Just search for the Trend Signal podcast. Leave a review, leave a comment where you can. That will be fantastic and well received, as long as it's nice comments, of course. You can watch and listen to us on YouTube as well, or you can go to our lowly website on trend-signal.com /trendsignal-blog, and you can tune into us there. Plus, every week we do some live trading webinars. We don't have the Governor of the Bank of England, unfortunately, but myself and my colleagues, we're teaching, we're training new traders with our trading strategies. In our sessions this week, we're going to be teaching 3 simple steps, 3 simple rules helping to boost your trading. So identifying trends, turning points, momentum, all that good stuff to help pick up some fantastic trading opportunities. And we'd love to see you online on one of these special events. So why don't you tune in? I'll read out the short link to do so. You can go to bit.ly, so bit.ly/learnts, TS for Trend Signal. So bit.ly/learnts. But get yourself booked in, select an event this week. We'd love to see you online. And everybody, happy trading, and we'll see you again next Monday. Bye-bye for now.
Bye now.